Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden messages in corporate filings and shed light on what's really going on with your favorite companies. Today we're diving into Blackstone Real Estate Income Trust's latest report, and let's just say it's all about the money going in and out for investors. If you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where we discuss these filings in real time. So what's the big news? Well, the company is announcing its distributions for August 2025. Think of distributions like dividends, but for real estate investment trusts or REITs, it's how investors get paid out for their investment. In August, Blackstone Real Estate Income Trust declared a gross distribution of $0, 0551 stock, with no stockholder servicing fee. This means investors in Class I get the full amount. It's like getting the whole pizza without having to share. For Class D common stock, the gross distribution was also $0.0555 and 5 as LROC CP of 0.00 euro. So the net distribution, what actually goes into the investor's pocket, was 0 ton of 5222. That small fee, while seemingly tiny, adds up for the company and reduces a bit of the payout for those particular shareholders. Then we have Class T common stock. Again, the gross distribution is $0.0551, but the stockholder servicing fee here is higher at $0.098. This brings the net distribution down to $0.0453, is more than double that of Class D. This tells us that different classes of shares have different classes of shares, have different cost associates, have different classes of shares, have different cost associates, have different classes of shares, have different classes of shares, have different cost associates, have different cost associates, have different cost associates, have different costs associated with them, which is common in mutual funds and REITs. Finally, Class S common stock also sees a gross distribution of $0.0551 min, but with a stockholder servicing fee of $0.001 ton zeros, resulting in a net distribution of 0 times 0, resulting in a net distribution of 0.451 per share. The fee for Class S is similar to Class T, meaning those investors also receive a smaller net amount after fees. The report also tells us that these net distributions will be paid to shareholders on record by the end of August and will likely be in their bank accounts around September 22nd. Investors can either receive this cash or have it automatically reinvested, meaning they buy more shares with that distribution. Because their share of income is added directly to their net asset value. This report is signed by Leon Volkyok, who holds the important title of Chief Legal Officer and Secretary. This basically means he's overseeing the legal and official documentation side of the company, ensuring everything is filed correctly with regulators. Now, what's the story here? The main takeaway is about how Blackstone Real Estate Income Trust distributes cash to its investors. They offer different share classes, and as we see in this filing, each class comes with its own servicing fees. While all classes get the same initial gross distribution amount, the fees mean investors in different classes end up with slightly different amounts of cash. This is crucial for investors to understand because even small differences in fees can impact long-term returns, especially when dealing with large sums of money or long investment horizons. For Class T and S shareholders in particular, those fees eat into their monthly income more significantly compared to Class I and D shareholders. This isn't necessarily a bad thing, but it's a detail investors absolutely need to be aware of when choosing which share class to invest in. It really highlights the importance of not just looking at the gross payout, but also factoring in any associated costs that reduce your actual take-home pay. Looking at this filing from a broader perspective, Blackstone Real Estate Income Trust is a massive player in the real estate market, aiming to provide stable income through real estate investments. These periodic distributions are the lifeblood for many of their investors seeking regular income streams. While this report focuses solely on the distribution amounts, it's important to remember that the underlying performance of the real estate assets held by the trust dictates the availability and sustainability of these distributions. If property values or rental income were to significantly decline, these distributions, if property values or rental income were to significantly decline, these distributions could be affected. This filing, while specific to distributions, is a small piece of the larger puzzle of how the trust manages its portfolio and serves its investors. In conclusion, this August 2025 distribution announcement from Blackstone Real Estate Income Trust shows the mechanics of how they return capital to their shareholders. The key difference across the share classes lies in the associated servicing fees, which directly impact the net distribution received by investors. It's a good reminder for any investor or considering investing to ensure they align with their income needs and cost expectations. Alright, that's our breakdown of Blackstone Real Estate Income Trust's latest filing. What's your take on these distribution details and what they signal for the company's investors? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out. And remember to subscribe for more deep dives into corporate filings. Don't forget to check out our Discord community in the description for more real-time discussions. Thanks for watching, and we'll see you next time on Corporate Decoder.